And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, good afternoon. I guess it depends on where you are. This is the Coach's Playbook. Tuesday, March 1st. It's Fat Tuesday. Hopefully you're getting your celebration on for Mardi Gras today on Fat Tuesday. We have, first off, we're going to be introducing a special guest with us today. Joe from Simpler Trading. We're happy to have him with us. But first, Mick, you got a shout out for us?
I do. Big shout out to Guillaume Fisher, up $7,800 trading the mini Dow this morning.
Good money in the Dow.
That's a heck of a day.
Caught a move, that's for sure.
Short a bunch off that settlement. My goodness. All right. So without further ado, Joe with Simpler Trading, Joe Rokop, how are you? It's good to see you. Joe has a class on trading a small account, which might be really useful for traders in the trading combine. Joe, tell us about it.
Oh, hey, John, and thanks to everyone here at Top Step for having me. Much obliged. This weekend, I did an account here I did a class here with Simpler Trading, which was titled Small Account Futures. And where I wanted to take the opportunity to share this class with all the folks here at Top Step, as when you folks are starting your combine and going through those 3 iterations, and then even more importantly, once you go live, using the principles of the class are going to be quite germane to you in passing all of those steps. So what I wanted to convey and what's most important is that regardless of, for the sake of discussion, the size of your account, if you have 10K, if you have 150K, when you're doing some of the combines, what you want to consider is that what your day trade margin is with that 150K account versus what you can actually trade margin wise with Tradevate is going to shift between that overnight recycle. So if you're looking to hold positions overnight, you will need that 150K. But if you're flattening up by 310, you can use those Tradevate margins, which are supported by Top Step, and then you could consider day trading a small account. And what's nice here in the class is we are focusing on the 2 type of trade setups that have the highest probability of a hit rate, i.e. the highest probability of success. So when getting started with the combine and when getting started in trading a small account, the flexibility of stacking losses is certainly a bit more stiff, if you will. So before you kind of open up and start trading a larger strategy with multiple trade entries and multiple entry execution methodologies, what you want to do is focus mainly on some of the things that are kind of small to moderate risk to moderate to large reward that also has a high probability of success. And that high probability could simply be 51%. If you're risking 5 points to make 10 points, and if you're 51% of the time making 10 points and 49% of the time losing 5 points, that strategy is a 5-point winner, right? So when you're starting out with small accounts, you want to hit singles, obviously, and with the occasional double. And if you set your risk reward properly, and if it's skewed in your direction, it does give you the opportunity to hit a few triples, right? Now, your objective is not to hit it out of the park, right? But you do want to give yourself the opportunity on that rare occasion where the market does really run and does, and you are able to make $7,800 trading the mini Dow, like the shout out we had earlier. And that can be achieved with the small account. So what I did was really review the principles of trading a small account, and not simply the execution methods, but also address the psychology behind it. And one of the things I'd like to kind of quickly mention here is when you are trading small accounts, you're not going to catch every move, and you have to know that going in. There are going to be some great trade setups that do pan out and that do end up making a lot of money, but because they did not fit all of your parameters, right, for that trade entry, you elected not to take that trade, right? But what you need to know and what you need to realize is to reframe that is, once you are successful in starting with that 10K margin, to update that to 20K and 30K, that's when you have the practice already done, the preparation already achieved. So now you have that larger account, that instead of not taking the trade that was a winner, now you can afford to take that, right? So you have to reframe the thought process of, boy, I missed this move, I should have taken it. Well, if it didn't fit your risk parameters, you properly followed your plan and you elected not to take it, and thus you were disciplined, right? But now, okay, a month later, you have that larger account. Now that trade will fit your money management risk parameters, and you can take it, and you already know what to look for and what to identify. So we're kind of in the class that I just did, we're talking about a real step-by-step procedure, a real blueprint, and how you can get started out in futures and to really build up at a solid pace. And so you can kind of keep that growth relatively linear in each iteration of your account increase.
So yeah, the idea of keeping to the asymmetric opportunities at the beginning, just hoping to achieve a 50% win rate at 2-to-1 reward over risk is something you're going to have to do, really, right, if you're going to be able to survive long enough and learn about markets well enough to be able to recognize some of those bigger opportunities, like the $7,800 win in the Dow today. So yeah, it's a great plan, a great idea, and you're going to miss trades, even when you're flush. There's going to be times you're going to miss some opportunities. But Mick, what are your thoughts on this?
Well, I like everything that I heard. John, you've always talked about keeping the math on your side. And I remember, showing formulas for success and stuff like that when it comes to win rates and risk reward ratios. So, I don't have a whole lot to add here. This is Joe's show. And, I like everything that I heard.
I'd love to kind of point something out Joe said that really resonated. When you sit down and you make these plans and you prep and you do a lot of work, just because there's a move in the market, I always go back to my history and being around this industry most of my life. And I can tell for one of the biggest, craziest days I've ever been around the markets, all money was made in a 45-minute period. We sat there on the floor. You see the markets moving, right? You can look And every pit, they've got the dome. You can watch it uptick and downtick all day long. And when you're sitting behind a screen, it's like, hey, there's action. Markets are moving. Just because maybe that crude oil, which I think is an interesting topic in and of itself right now, up like 7 or 8%, huge moves to the upside. But just because that market's moving does not mean there's an opportunity there. Every trader is going to look at it a little bit differently. Like Joe said, you're going to start this. You have to execute at the plan you have. If the risk is too great to take a trade, and just because you missed that move, but because the plan told you it's not there, it's not worth the trade, right? Because there's going to be greater risk in some of those trades. If you're risking 5 points or you're risking, 15 ticks in the crude oil. I like talking crude just because I got a funny comment, people making fun of me. I hate the price of gas right now, driving a pickup truck and being asked if I'm riding a bicycle, saving gas money. But, if you're risking 15 ticks, it's $150, right? That's what your plan says, or $200 or $300, if that's what the plan says. But when you start to look at the trade, you go, hey, I got a nice setup here, but I'm risking twice my standard risk to take this trade. Is it worth it? And that's the question you've always got to ask yourselves. And chances are, if it's not in your plan, it's not worth it.
Yeah, and so one of the things that we discuss is there will be those diamonds in the rough, and you need to have a plan for those situations. So if you want to take a trade where you can double your risk, of course, you need to then double or even triple your reward, because the thought process is if we have a situation like we have in crude, right, where it's a fundamentally driven trade and technicals all support it, right, it's fairly unusual where you can get an entry with a great technical setup, and on top of that, the overall trend not only is in your favor and in agreement with what you believe, but it's strong, right? So you want to have a plan for that particular scenario. And this is where it kind of comes back to in crude. Let's say you were doing a one lot in crude, and you're risking 150 points, right? So $1,500, which in most of the combines, which in some of the combines falls within your daily loss parameters. So what you want to do is you want that market to really take off. Okay. And so you need to have a stop loss plan, which isn't going to kick you out. Okay. You need to be loose with your trails. And most importantly, you need to have a target that's off market, right? You need to have a target that's sitting far away from your entry price, certainly farther than usual, right? Because number one, you're doubling your risk. Okay. So in order to offset that, of course, you simply double your reward, and that math stays the same, and which is kind of a scalable process, a repeatable process, right? But here in crude, when it was down in the 90s, right, and we had those gaps, the probability that it was going to hit and breach 100, was like a 90 delta. It was incredibly high that we were going to hit that $100 handle. Now from there, what's the next psychological level? 105, arguably 110. Okay, so when you're doing that, you want to be moving your stop loss up. The most important thing is not to trail, in my strategy, is not to trail market price by like $1, right? You want to have your HVA or your support resistance levels and let it rally into that next zone and then move it up to the bottom of the previous zone. So that kind of takes away the probability of getting ticked out on a sideways move with a traditional trail, and to bring that stop loss up in predetermined increments, right? And then eventually, if the market does get to that $100 level, that psychological level, okay, you want to bring that stop loss up to a level that is, some sort of predetermined, HVA high volume area, or an old swing high low or a Fibonacci, best case, some sort of combination of all three, and get it as close to that as possible. Because if the market breaks out of that $100 range, it's probably just not going to be a dip. It's probably going to fall back to its mean more often than not. And having been a crude trader for 10 years, I'm quite familiar with kind of the patterns in crude, which is one of the nice things that I'm able to help out with. And one of the things that we've kind of gone through in this class. Now, in the class also includes 4 live trading sessions. The class was on Saturday. Of course, it's all recorded, so you can buy and watch that class. Before the class, we did a free live trading session. And again, the purpose was to start with a 10K account and to slowly build that up, following the rules and parameters as outlined in the class. Now, our first trade, we did one trade on that Thursday. It was an $875 win. It was in the S&P. It fit all of our parameters. Now, when I started on the mic, I said, all right, if I was by myself, I would take this trade. It went up. Okay, it was a winner. I said, all right, if I was by myself, I would now do this. And that second trade, that was a winner. Then I called out a third trade. That was a loss. And so when I was talking through the live trading and doing my market analysis, I said, my plan was to only take trades that fit a specific set of rules, because when trading a small account, the trades I just mentioned and didn't take had a lower hit ratio, right? And so we want to focus on the stuff that has a higher probability of success. Now, in the grand scheme of things, once you get more apt at reading the market and you can better assess the trades that fit your money management rules, then it would have been a mistake for me not to take all of those trades. Okay. And then another kind of psychological thing that I talk about in this class in small accounts is when you see when you look back on what you did, right? You want to look back on what you did and say, did it follow the plan, right? And a lot of people do that when it was a loss and they say, no, I didn't. And they look back when it was a win and say, yes, I did. But if you're being honest with yourself and you're truly identifying, the ins and outs and the variables of your plan, you will start to notice that is often actually not the case. So I look back at some of my losses, and I do it almost immediately, and I say, if the same situation, and it happened today, if the same situation presented itself 10 more times, I would do that 8 or 9 more times, without a doubt. Now, after those 10 scenarios were complete, let's say my hit ratio on the trades I took was 45%, and then the 1 or 2 trades I didn't take were actually wins. That's when you go back and reassess your plan, right? But you can't change your plan based off of 1 or 2 trades. You've got to do it as a trade set. Because what you want to say is, I spent a lot of time figuring this plan out. I spent a lot of time writing it. There was a lot of work that went into the formulation of these setups, right? So you don't want to get too caught up on this trade, right? You want to use the strategy, the small account strategy, that will allow you to be consistent over time. And quite often, again, something I really encourage people to do is, especially on their winning trades, right? You want to go back at the end of the day or end of the week and determine if you did in fact follow the plan, or you were lucky, or it turns out the risk was really just too great on that. Okay. And then make notes. So now you know what you're going to do for next time. So after those 10 trades are completed and you're going back and reassessing everything, you've got some notes on each trade. So then now you know how to tweak it, right? Because a plan needs to evolve, right? The defense needs to change based off of what the offense is doing, right? So you do need to make adjustments along the way, but you don't want to be making large adjustments on the fly. You want to make minor adjustments after you have a solid set of data. And that's one of the things that we really dive into in this class.
Really like what you mentioned about being honest with your assessment as to whether you had actually followed your plan, especially during winning and losing streaks and winning and losing trades. Just because it's a winner doesn't mean you followed your plan, for sure. Dan, Mick, you have any questions for Trader Joe?
No, I think that's great information.
Yeah, love listening.
Yeah, awesome. Well, Trader Joe, if I wanted to take your course, how would I find you?
You can find us at simplertrading.com. I believe we will provide a link for everyone to join. The class, again, was on Saturday. That was recorded. And we have 4 live trading sessions coming up. The first one, I believe, is tomorrow afternoon from 1 to 3. And then Thursday morning from, I think, 8:20 to 10:20. And we stack them in a way where we trade an afternoon and then a morning. So that way we can analyze or perhaps put on some overnight trades. Overnight trades meaning something we would put on in the evening and then take off in the morning. That way we don't have to hold them during that recycle period between 3:10 and 5 o'clock, right? And so you have got some time, between now and then to watch that course or to watch as much as possible. And then when the live trading session comes, the signals and the trades that I take are quite black and white. It's buy it here, here's our target to sell here, and here's our stop loss. And then that's it. But that's the course of the signal. In the meantime, it's not either going to go straight up or straight down, right? We're going to have to manage that trade with some stop losses. So like I said, when referencing that crude trade, I'm with you for the completion of that trade. And there were a ton of people who took this course at Simpler. It did extremely well. So that's why we wanted to kind of extend the opportunity here to the Top Step folks. I paired up with Top Step about a year ago and did a class about trading the combine specifically. And this pairs very well with that and is a beautiful add-on. Now, you don't need to take both courses. If you were just going to take one, I would recommend taking the most recent one, as that's most applicable, a little bit more applicable to everything we're seeing now. Also, I don't have a lot of experience trading small accounts, but I now have another year under my belt of small accounts. So it was nice to kind of add all of that new knowledge. So simplertrading.com. And then in there, if you search for small account futures course, you'd be able to find it there.
I'm very interested in understanding more how you trail your stops, because trailing stops is an art form that I don't think anybody has truly mastered. So I would be looking forward to seeing that.
Yeah, it's as much art as it is science. So determining a way to have a quantitative method of defining art is challenging, but we think we've gotten there, at least about as close as we can get. So, and we have simplified it too. We've simplified it. So I would be very interested in your feedback as the guru of the group here to let us know what you think and see if I can make some improvements.
I think you simplified it. It's been simplified.
Simple. There you go. Simpler trading. It's been simplified. Absolutely.
All right. Well, Joe, thank you very much for spending some time with us today. We really appreciate it. We'll look forward to doing this with you again soon, hopefully.
Absolutely. We'd I love for you folks to have me back, and happy to add some market analysis too. That's not necessarily simpler related as well. So anytime you let us know, I'm available.
All right, great. On that note, Dan, you've got a word of wisdom for us?
I do. This one is traders need a daily routine that they love. If you don't love it, you're not going to do it. And I couldn't agree more with that. If you don't enjoy what you're doing, and as you prepare and plan and everything, it's not going to be, you're not going to do it well.
Well, that reminds me a lot of when I was in school. If I didn't love it, I wasn't doing it.
And interestingly enough, I actually wrote up a daily morning checklist and a plan. And if you watch the webinar for the class, that comes free with it. You don't have to purchase it, but that's a checklist I've been using for about 15 years. And it's comprised of two sections. There's the mentality section, and then there's the market inventory section, right? And so in the mentality section, it's how good is my sleep? Am I eating well? Am I mad at my significant other? How's that, right? And so that kind of helps you. It gives you, and there are 10 questions. You rate it from 1 to 10, and you kind of summarize, where you think you are, in a psychological manner. And one, if your answer is a 2 out of 100, that tells you, yeah, maybe I shouldn't be trading today. But as you get more experienced, what it really does is it helps you acknowledge that, think of it, and then perhaps put it out of your mind as you move on to trading. And it's an easy exercise to get you ready for the day. And that's about the only piece of paper that I print out on my desk. It's just this little paper. I do a little checklist and get through it. And it's a fun little plan too. And it's quick and efficient. So yeah, that comes with the class as well. Germane to the words of wisdom of Dan there.
Well, and I think everybody has little notes like that written down, whether it's something that's a checklist to do every morning or a bunch of little Post-it notes they've got all around their screens. Everybody's talking to themselves through those pieces of paper at one point or another.
And having a way to organize it into a repeatable plan is the name of the game of trading, right?
Yep. All right. Well, thank you all for joining us today. Joe, thank you again for being with us this morning and this afternoon. I'm going to take it easy on the hurricanes tonight. Tomorrow's a big trading day. We got a lot of information coming out. So, have a mint perhaps, and be ready for the trading day tomorrow. We still got to finish up today. Take your time, be patient. Think about what Joe said. You're being honest with yourself if you're following your plan or aren't you. Until next time, we'll see you on the